The Startup Retro is a new podcast from the team behind Overnight Success.
A weekly show where we help you level up on the Australian startup ecosystem by giving you an insider's view on Aussie startups and venture capital. I'm Will Richards.
And I'm Gemma Clancy.
At OS, we curate the most important news and announcements across the ecosystem and explain a bit of useful context behind them.
The Startup Retro podcast will follow a format familiar to our readers of the weekly newsletter, but offer an opportunity for much more discussion.
So, if you want to keep your finger on the pulse of all things happening Aussie startups and venture capital, start your week by listening to the Startup Retro. New episodes every Monday, starting the 1st of July.
The Startup Retro is brought to you by Day One, the podcast network for founders, operators, and investors.
Birchal itself has raised over 120 million on the platform and over 160 successful offers. So we're very much the largest platform in Australia that does what we do. And our funding volume on the platform has been growing close to 100% year on year.
Welcome to Fintechfun. Fintechfun is a podcast where Australian fintechs come to share their stories.
Hi, it's Chris Titley here. As part of the Fintechfun podcast series, I'm joined by Matt Vitale, co-founder of Birchal. Matt, g'day. How are you going?
G'day, Chris. I'm really well, thanks.
And Matt, how did Birchal begin? Tell us about the story, the origins, and the history of the business.
It's been around for over 10 years. The UK's probably got the most mature industry in the world, and the platform started to emerge there in 2010 to 2011. We were thinking, Australia, that is, government was thinking whether Australia should have something similar to the UK's equity crowdfunding regime, and put out a discussion paper through CAMAC, the Corporations Markets Advisory Committee, back in 2013. And Alan, my business partner and co-founder, who also co-founded Possible, made a submission as part of that discussion paper. And I was a young lawyer at a law firm, seeing this innovation happen in the UK, and made a submission myself personally. And then it took some time for the legislation to pass, but Alan and I got talking over several years about an opportunity to build an equity crowdfunding platform. And finally, the legislation was passed in 2017. And we worked really hard on getting our financial services license, and we were one of the first 7 to be authorised to host crowdsource funding offers in Australia as an intermediary. And haven't looked back. It's been a wild ride since.
And Matt, crowdfunding in its own right, as you mentioned, has been around for a long time, but you want to give the listeners a bit of 101 exactly what crowdfunding is?
Yeah, for sure. Look, there's a few different types of crowdfunding, and I think most people would be familiar with, or the mind would automatically go to platforms like Kickstarter, Indiegogo, and Possible. And these platforms operate on a reward crowdfunding model. So with reward crowdfunding, you'll get the project, a product or, whatever it is that the project creator is trying to create, but something nominal in return. You won't get a share in the company. And this is probably the major tension that existed between reward crowdfunding and what we do, which is equity crowdfunding. The highest profile example of this is Oculus. So there's a VR company. They crowdfunded headset on Kickstarter. They were raising about 200,000. I think that project raised around 2 million in the end. But it was reward crowdfunding, so people were pre-purchasing these VR headsets. Facebook ended up acquiring Oculus for a $2 billion valuation But because the people that backed through Kickstarter only got the headsets, and in some cases, many of them were still waiting on the headsets to be delivered, they didn't get a share of the upside or an appreciation in value because they weren't part of the business. They just, supported the business and saying, I'm happy to put my money up and pre-purchase this product that you're delivering. So they all missed out, all of these backers, and probably highlights the key tension that exists between the two models. With equity crowdfunding, it is an offer of securities. So people are becoming investors, and it's, equity capital. So they're, there for the upside, but the capital is at risk as well. And because of that, it's highly regulated, as you would expect to be. Retail investors are probably the unique feature of what we do, in contrast to other sources of finance that typically are only available to wholesale investors, and it's bringing, I think, some standardization and shining a light on what has historically been pretty opaque industry. Venture capital investment and things like that. The deals haven't been able to be advertised like they can with equity crowdfunding. So it's, bringing some, I suppose, much needed regulation and standardization to venture capital.
We've seen a bit of a trend with syndicates here in Australia over the last 6 or 12 months of people putting their own syndicates together. I'm always curious around how that works from a financial product point of view, being sophisticated and wholesale, as you mentioned before. What does crowdfunding do differently to that to allow me to potentially put in $300 into a fast-growing startup?
Yeah, so, the fundamental difference between the two examples you've given is that with equity crowdfunding, people are investing in the company directly. So, if you're investing $300, you'll get $300 worth of shares and you'll be on that company's cap table. If it's, it depends on how the syndicate is structured, but like if there's, a fund, sometimes they use with like unit trusts and things like that. Other times, a group of investors will be investing separately but collectively. But I suppose the fundamental difference is this direct connection with the company, but also the ability for retail investors to be involved.
And Matt, when it comes to a company that lists on your platform and raises through your platform on the crowdfunding side, what do you think is a major benefit besides capital when they come on and list through you?
Look, there's a few, and it's really being a public offer of securities. We really lean into the relaxed advertising restrictions that we have to work with crowdfunding. So, PR, digital advertising, just building this awareness for the company and its opportunity is something that you don't really get if you're doing, a private deal or historically how these early stage deals would be done. The usual pattern of events would be, company kind of pitches to, multiple professional investors, but isn't advertising their offer, and then they close their round. And then if you're lucky enough, you might get an article in the startup press or maybe the AFR, kind of usually standing in a laneway against the brick wall or something, arms folded, and yes, the deal's done. But with equity crowdfunding, you get to build your brand awareness while you're marketing your offer. So, that's a key benefit. And a lot of companies can kind of reconcile the investment to build awareness for their capital raise with just building awareness for their business. The second is, you can potentially end up with hundreds or thousands of investors as a proprietary limited company. So that's one of the game changers of crowdfunding is Pty Ltd companies that usually would need to convert to a public structure once they got over 50 shareholders, can now have a potentially unlimited number of shareholders because anyone that acquires shares through a CSF offer is not counted for the purpose of that test. So what this does is enables companies to have a wide audience of investors that can be useful for a variety of things. just general advocacy in the market, referring people to their business, any number of things. The opportunities, I suppose, are endless and really depend on the company and what value they can get out of building this community. But that's really the key. It's a company has to buy into this notion of having a large number of supporters and building a community, and they get out what they put in. If you're investing in building the community and getting these shareholders to be engaged in your business, that'll usually provide benefits to the company. But if some companies just find this too confronting, and it's not for everyone, and that's okay. There are other types of capital that companies can seek if building a community of passionate fans is not their bag.
And Matt, in regards to the progress of your company in its own right since inception, how has the business gone?
Yeah, it's growing really strongly, which is tremendous. We publish some industry reports. We've just recently published our funded report, which tracks the performance of the crowdfunding industry over the financial year. So, in total, the industry is raised over $185 million across over 240 successful offers. Birchal itself has raised over 120 million on the platform and over 160 successful offers. So we're very much the largest platform in Australia that does what we do, and our funding volume on the platform has been growing close to 100% year on year, which is what I think you would expect with a new industry. Certainly we look to overseas industries, the UK and the States, as relevant precedents for the growth that we can expect during this ramp-up phase. But we're just really committed to making early-stage businesses and investable and attractive asset class for wealth creation for everyone.
And Matt, putting the hat on for the future, if we do this interview in 6 months or 12 months' time, where would you like to see Birchal be and all the offerings that you come to market with?
Yeah, it's an interesting one. Our growth initiatives really building out additional products and services to make this an investable and popular, attractive asset class for investors. So we've got a new stakeholder reporting tool, which we're calling Birchal Engage, which will help companies manage their investors or maintain this flow of communication with investors post their raise. This is something that we see that some companies are doing really well, but other companies probably have some areas to improve on, and we want to make this as easy as possible for them for them to get all of those benefits that I've mentioned from building an engaged community. The second thing that we're working on is looking at some secondary trading or liquidity solutions, because these are unlisted investments, and it's like any private investment, it's your opportunities to trade out of your positions are not as easy as they are in the listed space, as you would imagine. But to drive confidence and improve the utility of equity crowdfunding for investors, we think that a lot of work needs to be done on this secondary trading front, and that's what we're committed to. And then other than that, just increasing funding volumes. I think there's been a lot of talk about the tech industry at the moment and valuations coming down, and VCs kind of taking their foot off the pedal a little bit through these choppy conditions. But in a sense, we've been through this before, particularly at the start of the pandemic, and what we saw that equity crowdfunding was amazingly resilient and still open and still able to deliver capital to investors. So we're very hopeful that we have a role to play in backing founders and getting capital to them even during difficult conditions.
No, absolutely. And that's interesting on that secondary market, because that might become a bit more relevant than ever with people that maybe early staff or people that are early investors that may want to take some liquidity to fund a mortgage or whatever it might be. I think it's a very interesting space, and you've seen some establishment of some funds here in Australia. Let's go on to a little bit of the fun part, if quote unquote fun. Matt, when you don't think about crowdfunding, what do you do in your spare time? Do you get a chance to wind down? Is there a particular thing or hobby that a lot of people may not know about or may know about?
Look, not as much lately, not as much as I used to. I think I'm probably burning the candle at both ends at the moment. But look, I really like cooking. My father's a chef. We're kind of a hospitality family, so always been interested in food and things like that. But I'm also a father of three, so my kind of outlets at the moment is living vicariously through my kids. So my son plays club footy on the weekends, and does SNIPPETS, and we got away, and he's kind of learning how to surf. And I think that's the downtime is efficiently kind of commingled with family time as well. So
and if I come over to your place, mate, what are you cooking? What's your signature?
Well, if the weather's good and we can get out in the backyard, I think some dry-aged ribeye steaks from Gary's Quality Meats at the Param Market.
That's a good plug.
Cook some of those. Yeah. So, no, he's my butcher. He's a good friend, and best dry-aged meat in Melbourne, in my opinion. So, yeah, we'll be eating some ribeyes.
Ribeyes, good. And then we'll be watching the footy. Which team would we be supporting?
I barrack for Carlton, who's...
right. Actually, danger game this weekend, just for the listeners out there. We are recording prior to a Brisbane versus Carlton game at the Gabba on Sunday afternoon. Unfortunately, I won't be there. My son will be there, who will be barracking for the other team, which is Brisbane, but a very, very close fight for top 8 positions coming. A crucial game this weekend. Would you think so as well?
Oh, absolutely. But, as a Carlton supporter, I do feel it feels kind of weird being in this position, certainly the position on the ladder at this time of year. It's been tough going the last 10 years. I grew up in Carlton in the 80s, and, the halcyon days.
And Sylvanis.
Exactly. Correct. So, pretty easy club to go for when you're in the schoolyard as a little tacker. But unfortunately, I lost the battle with my son, who barracks for Richmond now.
Right. Well, he would have been happy on the weekend against Brisbane when they kind of decimated themselves in the second half. But yeah, wow. So the Carlton Richmond game, what happens there? Do you get out to the G and you sort of wear your kit and sort of have a bit of a Barney?
Yeah, I mean, it's a tough one because I vowed to never be one of those parents that would allow a divided family situation to take place, but here I am. So, and one of my friends who's really mad Richmond supporter is in one of those divided families that I swore would never happen to us, and he's the one that's offered to take my son to all the Richmond football games. I believe it's you. So
there you go, excellent, Matt. Thanks for telling the story about Birchal, the early days, on why you created the business, the opportunity that you saw, which came obviously from some overseas trends and how you're positioning yourself locally and the achievements that you've done thus far. Well, I really look forward to catching up, and can't wait to chat again and see how the progress is going on Birchal.
Thanks so much, Chris. Really great to chat, and thanks for having me on.
For more information on Sub 11, jump onto our LinkedIn or email me, chris@sub11.com.au. Thanks for listening.
The Startup Retro is a new podcast from the team behind Overnight Success.
A weekly show where we help you level up on the Australian startup ecosystem by giving you an insider's view on Aussie startups and venture capital. I'm Will Richards.
And I'm Gemma Clancy.
At OS, we curate the most important news and announcements across the ecosystem and explain a bit of useful context behind them.
The Startup Retro podcast will follow a format familiar to our readers of the weekly newsletter, but offer an opportunity for much more discussion.
So, if you want to keep your finger on the pulse of all things happening Aussie startups and venture capital, start your week by listening to the Startup Retro. New episodes every Monday, starting the 1st of July.
The Startup Retro is brought to you by Day One, the podcast network for founders, operators, and investors.